So let's go over active trade management and what it is. The definition is basically as simple as what it is. It's just actively managing your trade by moving around your stop loss, your take profits, and your orders, scaling in and out of a trade as price, volume, and new data comes into the market. So we're going to go over when to manage the trade, profit targets, stop loss, break even, your confidence in the trade. The confidence in the trade will manage your risk tolerance, and you'll find your confidence through price action. We're going to go over watching the active price action and new data that comes in. And we're also going to go over to adding to winners and taking partials. Now to do all this, we're going to have to get into a trade first. So if you come over here on NASDAQ, you can see we held these lows perfectly, here to here, and we found immense buying power afterwards. Now also, as you can see, as we held these lows, we're in a big wedge and even a 30-minute wedge for these candles right here. Liquidity sweep off this wedge, but still holding these lows perfectly. So I would be bullish on this trade. Had a small sell-off, found some buyers, a small sell-off again. Now it looks like we're wedging here. Higher highs, higher lows. So I would look to enter somewhere in this area right here. My stop loss would be somewhere in there. Now we get back to profit targets, stop loss, and break even. So we assess my stop loss. Now I move my trade to break even when the 1-to-1 ratio of the stop loss gets touched. So somewhere in this area, sometimes a little bit higher, but almost always 1-to-1. Once we touch this area, I then move my stop loss to break even. Okay, so right here I would be in this trade. Still higher highs, higher lows, looks great. Boom. We hit this 1-to-1 area. My stop loss is now at break even. Now where do we take profits? I look for TP1 right here over 2.5, which is perfect for me. Now we scale back a little bit. You can see this was a big resistance zone. Once we break through, if we break through with conviction, not just a sweep then to crash down, I'd look for my next profit target to be in this area right here. You see 15995, so I would look for it in this area of 1600 just before. Now we also have to look at the data that's coming in. Good buying candles. There's still sellers on the tape. It's not that they're just letting them run through it looking for a bull trap. Still sellers on the tape. Biggest buy candle since the first candle over here that made the initial move. Take profit one not yet touched. Just came short of that right there, which is fine. Okay, take profit one touched. Now I'd scale out 25% of my position right here. And I would look to move this next one. Right here, just below 1600. We come back to this. What's our confidence in this trade? What is the new data telling us? We already took partials, but are we going to add to this winner now? If the new data tells us something good, whether it would be news or good buying in the tape coming off of a wedge, we might add to the winner, or we might just leave it like this. So now take profit 2 is right here. We'll go back to a 30-minute chart. So we can target supply as the initial goal, but I'll also keep an eye on this level. There's a consolidation here, consolidation here. We wicked right here, and then we came down. So the big eye at 1610. So call it 1610, a nice whole number. Okay, so now we see also we're getting to a little wedge area. I'm going to see if we break down over here. Again, our stop is at break even. Okay, so now we pause this and we see what volume is telling us. Yes, we're moving down here, but look at the volume compared to the volume bars here. Even these volume bars here, there was a lot of selling pressure, a lot of aggressive sellers, and they were being held off by passive buyers all along here. Same thing with over here. We touch these bottoms right here, and again, aggressive buyers. So we're passing these higher highs, and we're still holding this area of conviction. So now I would look to add to my position here. As you can see, this nice wedge right here, right in between. So I would look to add in this area, and my stop loss would be below here. Now, to manage this loss, if it were to just shoot down here, I would technically lose money on this trade. But I still have this trade going. So I would cut the whole position out right here. So I would still be in the profit. This trade would be, for example, if this trade is 10 lots, my second trade would only be 5 lots. It would be half the size of my first position. So if I cut the full trade here, I would make up for this loss 2 times over, and my average take profit would be in here still. Don't forget I also took 25% profit at this move right here. So now, again, more buying pressure coming up. Okay, 1600 hit. This would be my second take profit right here. So now I do not move my stop loss on this one, just because I still have this trade riding over here. So my initial stop loss for both of these trades will now be this area right here. It'll be underneath this consolidation right here. So this is my stop loss for both of these trades. Now, like I said, the 1610 will be our next area of interest. Again, all I'm seeing here is buying pressure. There's no real sellers on the tape. Higher highs, higher lows the whole time through. So 610 hit. At this point, I would be out 90% of all my contracts. Now, some people might be adding to this again. I personally only add once. What is price action and new data telling us? There's no sellers on the tape yet. We're still very confident, but we're out most of our position. This is for a scalp. Now, as you can see, this is a 4.0, 4.4 trade, and we still have money in the market. Now, to make things nice and simple, I'm just going to clear all this out. So now we're so far up that even if it's only 10% of my contracts, I don't want to give all this away. I don't want to give 50, 60 points on the NASDAQ away. So I would move my stop loss, again, under this consolidation for my rest of the 10, 25%, whatever I have. And my target would be supply right here. So the actual trade itself will look like this. So I would let the rest ride. Stop loss is right here. We'd still make money on the 10% of the contracts. And we just let it ride all the way through. So now we're getting to this point where, again, we start to slow down. Some more sellers in the market here. But if we look back, we saw sellers over here too. We just came down a little bit and we rallied harder. So now I would move my initial stop loss up. I would look for the psychological level of 16,000 to hold. So stop loss is just a little below there, and we're targeting 1604. All right. So now we cleared it. We're fully out of the position. Those last 10% held perfectly. Now, in hindsight, you could say, why don't you just target supply first all the way through and you would have made 4 times the money. For me, when there's chop in the market, just like how it was here, just goes up, down, I like to take my partial profits just in case it doesn't rally all the way to supply this time around. What if we came here, came below here, got some more liquidity, and then we came up to here. I would have been 50 points on the NASDAQ, then break even. So I could have been up, whether it's $100, $1,000, $10,000, and then boom, down to zero, taking zero profit. Your probabilities of making money are way higher when you can take small profits, like I said, 25% here, 25% there, keep on going. Just in case you get a pullback that takes you out, you still make some profits on the day. That's why I think actively managing your trades are way better than just making a thesis. And if it's wrong, you make no money and you lose money. And if it's right, you make money. For example, if I got in on this one, my stop loss was here. Even if I had great risk management, it would look something like this. We would scale up to here. I would take profits on this first jump right here. So TP1 would be right here. Of course, if I take profit 1, my stop loss would be now break even. So boom, I hit break even. Okay, at least I took profit. If I didn't take profit and my stop loss was just there, that would have been a break even trade. Or if you want to go even more into detail, say we got in over here. Our stop loss is at this wick right here. And our take profit is all the way up here. Not even supply. Say our take profit's right there. We go through this trade without taking... So now we go through this trade without taking any profits at all, when you should have taken profit here, 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 everywhere. There's plenty of places to take profit. The trade is now going on 4 hours. And look what happens. We end up losing money because we're not actively managing our trade. We're not moving it to break even, and we're not taking profits. This is worst case scenario. You go from up a couple $1,000s to now losing a couple $1,000, instead of either just making it to break even when you hit a certain point up here, or even maybe take profit 1, maybe take profit 2, and then we stop out over here at break even. So instead of break even on 50% of your trades, take profit 1 on 25 and take profit 2 on the other 25, you would then be losing money if you were actively managing your trade. So that's why I personally actively manage all my trades. We first start with our first profit target and our stop loss. Once we get to a 1-to-1 or 1.5-to-1 on our stop loss, we move it to break even. Now we assess our risk tolerance through our confidence coming from price action. We also learned how to look at active price action and new data coming in, whether it's through wedges, higher highs, higher lows, or volume. And we also learned how to add to winners while still managing our risk tolerance. So instead of losing money, we're still making money, even if our winners are not correct. And we take partials just in case our original full thesis, just like this, is not correct. This thesis right here would have been incorrect due to this candle. Our first thesis was all the way correct, managing to supply.